Welcome back to Yahoo Finance Live. There's, of course, no shortage as of late right now when we look at the market for catalysts and upside surprises here on the earnings front. Also the fact that half of adults here in the country have at least one vaccine already in their system, but there are risks to the downside, and that might be one of the reasons why analysts might not be so quick to upgrade some of their forecasts. And potentially a relapse could, of course, come depending on what we see happen on the COVID front. And for more on that, in terms of where the market's at right now, I want to bring on our next guest, Candice Bangsund, Fiera Capital Global Asset Allocation Vice President and Portfolio Manager, joins us right now. And Candice, when we look at this, your latest note kind of walks through potential scenarios that you see here. And obviously, the most likely as we continue on this path of what looks like impressive economic data coming in. But you do assign a 15% chance of a relapse. Very difficult to really see how that might come to fruition here on the variance front. So many unknowns. But talk to me about where you see risk reward where we sit right now.
Yeah, well, I mean, 15% of our overall scenarios in a relapse scenario, so 85 in the recovery scenario that is largely unfolding as we speak. The recovery scenarios have been reinforced, obviously, given the developments on the vaccine front, the accelerated pace in rolling out those vaccines. It's allowed investors to look through the near term towards the end of the pandemic. Of course, combined with massive fiscal spending in the US, monetary policy support, extended support from central bankers, likely reinforcing that view. But of course, the risk is the lingering virus. It continues to circulate across the globe. And of course, it will all hinge on the race between, the vaccine and these new variants as we move forward.
The risk of a subdued recovery seems to be really sort of right in the middle there. You've given that a 30% probability, but I wonder how much of that you think has to do with monetary policy as well. We have heard over and over the central bank essentially say this is not the time to take our foot off the pedal. And yet the market has sort of run up against ahead of those expectations with some jitters about potential rate hikes quicker than expected.
Yeah, well, there's a couple things there. On the policy front, I think this has significantly reduced these downside scenarios. The fact that policymakers have pledged their unrelenting support has largely placed a floor under both the economy as well as financial markets and equity markets in general. And one thing that I think the market is underestimating is the Federal Reserve's willingness and desire to allow the economy to run hot in this rapid recovery scenario, which is our base case. This is creating some notable upside for both the economy and stock markets alike. And this is just something that investors have not come to realize, that Fed officials will allow inflation and the economy to run hot without stepping in and reining in that accommodative central bank support.
When it comes to allocations, though, it's interesting if that's going to be the case. How do you see maybe smart investors rebalancing here if the Fed is still going to be supportive and you believe them? How you would be allocating, a smart portfolio right now?
Well, this whole reflationary narrative that I'm talking about, whereby we see stronger growth, higher inflation expectations without the risk of tighter monetary policy, bodes particularly well for the value-oriented corners of the market that underperformed in 2020 versus, say, the growth or the technology trade that was largely the work-from-home pandemic trade that did extremely well through 2020. We expect that rotation that's already begun here into value to gain further ground. And there's more room to run purely from a valuation perspective, where the discount to some of these value stocks is at extreme levels, but also given that reflationary environment of stronger growth, accommodative monetary policy. This is a lucrative combination for some of these more cyclically oriented sectors whose fortunes are tied to the health of the global economy.
Candice Bangsund, Fiera Capital Global Asset Allocation Vice President and Portfolio Manager. It's good to talk to you today.